And talking business, last week ended on a bullish note as the Nigerian stock market closed the week on a slightly positive note. The all-share index recorded a marginal growth as trading closed with a gain of 0.06% to close at 38,943.87 points on Friday, 17th September 2021, compared to 38,921.78 points recorded at the end of the previous week. This is contained in the weekly market report for the week ended 3rd September 2021, as released by the Nigerian Exchange Group, or NGX. During the week, the equities market capitalization gained 11 billion naira to close at 20.29 trillion naira, compared to 20.28 trillion naira recorded in the previous week. And now joining us live on News Central now is the Managing Director, Trust Bank Capital Management Limited, Aziz Lawal. It's another Monday and it's so great to have you on the news with us today.
Yeah, good morning, Rita. Thank you for having me.
Good morning. Okay, let's talk business. During the week, the equities market capitalization gained 11 billion naira to close at 20.29 trillion naira, compared to 20.28 trillion naira recorded in the previous week. What is your position on the performance of the market?
Yeah, thank you, Rita. The 11 billion naira sounds very big, right? Yeah, but sadly, the market was tepid throughout the week, throughout last week. We saw very little enthusiasm from traders and investors, including bargain hunters and profit takers. All participants, showed very little interest, and that was obvious in the performance of the market as it moved up and down marginally. In more context, look at on Monday the market gained 0.02%, and on Tuesday, on Monday it lost 0.02%, and on Tuesday it gained 0.01%. And it remained like that for the rest of the week. Like you rightly noted, the bulls closed the week with a marginal, gain of 0.06%, and like you said, 11 billion. And relatively to what we used to have before, that is very, very low. But the good thing is that the market still closed to bullish. This week we expect the market to trade along the same pattern. However, we expect a bit of recovery in activity levels. Yeah, thank you.
Okay, Aziz, last week at the Treasury Bills primary market auction, rates were held across all tenors. What impact is this likely to have on trading activities this week and ultimately the outcome of the bond auction on Wednesday?
Yeah, the fixed income market. Two questions. As for impact on trading activities, specifically the bond market now, we already noticed increased buy-side activities following the conclusion of the prime market auction last week. We expect the same sentiment this week. However, some traders may play the wait and see strategy before the auction. As for the auction, which is the second part of the question, we expect rates to close around the yields trading in the market presently. Currently, yields are trending downwards in the secondary markets. Again, it's a good time for the government to come to the market to borrow money. Thank you.
Okay, now at the conclusion of the MPC meeting on Friday, the committee left all policy parameters unchanged. Is the conclusion of the committee in line with market expectations?
Sorry, I didn't get that question.
I was talking about the conclusion of the MPC meeting that was last week on Friday, and the committee left all policy parameters unchanged. Is the conclusion of the committee in line with market expectations at the moment?
Okay, yeah, thank you. Yeah, the parameters unchanged there, basically means hold. So typically the MPC weighs the pros and cons of tightening, holding, or loosening the stance, their stance of policy, noting the impacts. So they weighs these pros and cons around the impact on growth, price development, unemployment, and exchange rates. Since the GDP is currently growing and inflation is trending downwards, it becomes a case of why change the winning policy. So as a result, it did not surprise the market when the MPC left all policy parameters unchanged. By that, we mean MPR was retained at 11.5%, while the asymmetric corridor of plus 100 minus 700 basis points around the MPR was also maintained. The CRR was held at 27.5% and liquidity ratio at 30%. And we hope that, I mean, the quarter three report for GDP will also show a growth, and inflation will continue to trend downwards. Yeah, thank you.
Thank you so much, Aziz Lawal, for joining us on the Business Desk at this time. Thank you.
Yeah, thank you, Rita.